Hello and welcome. You're watching Market Fatafat on ET now. Well, I'm Snehisha and with me is Vinny Motiwala. And Vinny, market's not doing all that much in today's trade. You had Nifty Bank that recovered quite some bit, but it's back to where it was. So tell us how the markets are looking like.
Absolutely. So substitute of trade coming in for the Nifty just right now, 0.1% of uptick. Yes, off the day's lowest point, but it's remained in that range and around that mark. Not much of an excitement. 24,720 levels approximately. That's where the Nifty is trading at. We have the mid and small cap, so let's pull out the Nifty small cap. That's seeing an outperformance coming in. Nifty small cap is up almost 1% in trade. Nifty mid cap, that's also trading with gains of 0.2%. Clear outperformance is coming in from the small cap side right now, as you're looking at it on the screen as well. Mid cap holding on to what Nifty is doing. Small cap is where the outperformance is. Nifty Bank, not much of an excitement. Let's pull that chart up. It's down 0.7 to 0.8% in trade. Opened up slightly on that, towards the verge of the green side, but then nothing exciting happened. Almost near the day's lowest point is what the Nifty Bank is trading at. Nifty Media, the top sectoral gainer today, is coming in as 1.4% uptick as of now is the Nifty Media. So keeping an eye on that one. And FMCG too managing to hold on to good gains. Yes, that's how the market is looking like. Not much of an excitement. Specifically, individual names is where we're seeing a move. But yes, that's how the market is. Almost a bit subdued is what we're seeing today.
Absolutely. So that's what the market picture is looking like. And like Winnie said, lots of individual buzzers to talk about. And we'll be talking about all the big buzzers in today's trade on the back of individual news flows as well as technicals. On the technicals, we do have Nagaraj Shetti, Technical and Derivative Research Analyst at HDFC Securities, joining us. And on the fundamental side, we do have Genus from the research team joining us. Gentlemen, thanks so much to both of you for taking the time out and joining us. With that, let me kickstart the show then, talk about the first stock today, and that is PNB Housing. This stock has been the talk of the market today on the back of the block deal we did see coming today, because as much as 1.39 crore shares representing a 5.4% stake in the company was sold in a block deal, and General Atlantic Singapore Fund is expected to be the likely seller. This is a private equity investor, but we'll only be getting confirmation on this and more details about what price the block deal took place at and the exact amount of stocks that were traded once the market closes, and we'll be getting more details on that in the evening. But well, yes, on the back of equity changing hands in the big block deal coming in, PNB Housing up 7% in today's trade.
Okay, but on that note, we also actually managed to speak to Sumit Nagar in terms of overall where the market is headed, plus specifically on the housing financier side, what is the push there and what does he believe about the stocks? Listen into his views.
In affordable housing finance area, especially in southern part of the country, they are the biggest player, right? So the likes of SBI, PNB, they're generally not operating in affordable housing finance area because it's a very tough underwriting. The ticket size of the loan is, 8, 9, 10 lakhs. Their biggest competition actually comes from money lenders who are lending at a much, much higher rate. And that's the reason why Aptus has continued to grow more than 20% every single year going back a decade. This is a very under-penetrated area. And that's where the opportunity lies. You have the strongest player in one region of the country. They can potentially expand contiguously, beyond there. Long runway for growth. There is competition, but they are by far the most efficient player in that market, and it reflects in their financials. Like if you look at their ROA, they are best in class. Nobody comes even close. So that's the opportunity, right? Having said that, it was true a year ago. It was true 2 years ago as well, right? The markets haven't appreciated that, and it hasn't done well. But it doesn't mean the value is not accruing. They've continued to grow their earnings at a pretty rapid rate. The book continues to grow. ROE keeps improving. And eventually, at some point, market will take notice.
Let's move on to the next stock, and we have Varun Beverages that is buzzing in trade today, holding on to gains of almost 3% as of now. And why is that so? We have a brokerage note from BOFA there that is keeping a target price of 1,840 rupees. So considerable upside of around 18-19% that one could be expecting on the stock, even from the current levels that we're watching out for. What they're saying is that the business fundamentals for Varun Beverage, that is quite strong, that remains strong. And for BOFA, it's among their preferred picks in their consumer business side, as well as overall they see a good visibility in terms of outsized revenue as well as earnings growth. 20% plus CAGR growth is what they're expecting versus most of the peers. So yes, they expect that good performance to continue. Earnings growth is something that will be supporting the valuations of the company. They believe that the pullback after Q2 results is enhanced and there's a buying opportunity that one should be watching out for. So yes, keeping an eye on that. Today holding on to gains of 3% in the last 1 month, the pullback that they were talking about as well. We've seen the stocks here decline of almost 1 to 2%. So yes, surely an interesting one to watch out for and trade.
All right, let's keep it going with all the stocks. And Nagaraj, you've picked out Shyam Metallics on the charts for us. Last 6 months, 17-18% uptick coming in, so modest returns. But what are you penciling in on the charts now, and which direction do you expect the stock to head in?
Hi, good afternoon. Shyam Metallic has been in a constant uptrend. What we can observe on the daily chart is the higher tops and bottoms, and currently the stock price is repeatedly making an attempt to break above the strong hurdle of around 770, 775 levels. The overall chart setup is looking positive for the stock price. I'm expecting a decisive upside breakout from here onwards, and the next overhead resistance to be watched is around 830, 835 levels.
Okay, let's move on to the next stock. And Jinai, you've picked out SJVN for us. What is the news flow here?
Well, so SJVN is focused on the back of brokerage note by Goldman Sachs. They have maintained their sell rating but have hiked the target price to rupees 85 from the earlier target price of 75. Now, what they see as a positive for the company is potential real estate monetization, which will be kicked in FY 2025. But there are some negatives as well, which Goldman Sachs are pointing out. The first one is Buxar thermal plant, which has been further delayed, which could impact the financials of the company. Apart from this, continued slippages in large projects commissioning could also lead to consensus earnings cut is what Goldman believes, and at this current valuation the risk reward seems unfavorable to them, and that is why they have cut and that is why they have maintained their sell rating. If you look at the stock has been falling for past three sessions, and right now is trading with the cuts of 1.3%.
Okay, so Goldman Sachs maintaining its sell stance on that stock. But let's move on then. And Nagaraj, you've picked out MRPL. Now, when I see this on the charts, last 1 year itself, the stock has more than doubled. Do you think this momentum is going to sustain, or is it some time for some slowdown in this stock?
I think the stock has witnessed the slowdown in the last couple of months, and we can see unchartically a range-bound movement and a downward correction in between over the period of time. Currently, the stock price is showing a range-bound action at the lower levels. Recently, it has made a failed attempt of downside breakout of the support as well, and now showing a bounce back. Overall chart pattern is looking positive for me. I'm expecting an upside bounce from here onwards. So initially, there is a resistance around the 213, 214 levels. Once it moves above that levels, then one may expect a sharp up move in the stock price in the near term. So the next overhead resistance to be watched is around 230.
Okay, keep an eye out on these levels over there for MRPL. But on that note, we're going to step into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Hi there, welcome back. You're still watching Market Fatafat on ET. Now let's keep it going with all the big buzzers in today's trade. And speaking of buzzers, let's take a look at what Genus Power is doing, because shares of this company soared 5% to be locked in the upper circuit today after the company announced its wholly owned subsidiary received 3 letters of awards worth 3,608.5 crore rupees. The orders involve appointing advanced metering infrastructure service providers to design, supply, install and commission an advanced metering infrastructure system. Remember, last week also its subsidiary secured 3 letters of award totaling 2,925.5 crore rupees, and now with this recent order win, Genus Power's total book stands out at 28,000 crore rupees. So yet another big order win coming in for this stock, and stock locked in upper circuit as we speak, winning.
Okay, let's move on. Talk about Divi's Lab. That one is buzzing in trade today, holding on to good gains. Today we saw it up as much as 3-4% at one point of time. Right now, also managing to hold on to that 3.3% gain. Now, what came in as a news flow is that the US FDA's approval for the generic version of Novartis AG's heart failure drug Entresto that has now been paused. Now, a couple of weeks back, we had seen this news flow came in that which was a bit of a negative for Novartis and in turn negative for Divi's Lab because they are the producer for the inventor that is Novartis. Now, Novartis has appealed for a preliminary injection of this denial that they've got for this drug that was paused, and because of that, this turns out to be a slight bit of a positive if actually this goes through for them. The appeal court will be making more decisions on that. They've said that they've satisfied the requirement that was to be given. This is the information coming in for Novartis, and that is why we're keeping an eye out on Divi's Lab on the back of this news for a slight bit of a positive because obviously they are the supplier to the innovator that is Novartis of this drug.
Alright, so Divi's Labs also in focus today, but the pharma space continues to see decent growth without valuations being fully discounted, and additionally agrochemicals are bottoming out. Now this is the word coming in from MK's Manish Sonthalia. Let's go across and listen into his rationale about the entire pharma space and why he's bullish on this sector.
On a relative basis, pharmaceutical is still an area where there is decent growth and valuation has not yet got fully discounted. This comes on the back of destocking in the pharma space globally and also the specialty chemical space. Agrochemicals, by the way, is looking like bottoming out, not so much in specialty chemicals. And pharma obviously looks like having bottomed out in terms of destocking. In terms of Indian pharma, again, I would believe that there is a case for leaning more towards chronic as opposed to acute, because there you have a very good comfort on margins vis-a-vis acute portfolio. The entire APM market may be growing at 10 to 11% in value terms, 5 to 6% in volume terms. But I think the growth is going to be faster in the chronic segment as opposed to the acute segment. If you position yourselves early in the cycle, you're likely to be a beneficiary when the growth comes through in the next 1-2 years. Of course, the pipeline, the molecules, what is going to get commercialized, phase 3 clinical trials, what is the depth of the molecules out there, that will all determine. On the other hand, you will have diagnostics, which again, to my mind, looks like a bit too stretched in terms of valuation, but definitely you have a play out there. And then obviously you have the US exports, and there again, the base exports as well as your specialty portfolio. That is all going to differentiate the entire pharma space.
Okay, let's move on and talk about the next stock that we're going to talk on the technicals, and that is CEAT. Nagaraj, when you're looking at it, seems like last 1 month specifically, we've seen a bit of an up move that's again come back for CEAT. What is the word now on CEAT? Do you think this up move that we're seeing in the last 1 month specifically is something that will continue?
Yeah, of course, likely to continue. The overall chart pattern is looking a range-bound action, and over the last couple of months, this stock has been continuously making an attempt to move above the 2900 level, which is a strong resistance as of now. And I'm expecting with the recent bounce back towards the resistance, I'm expecting a sharp upside momentum to build up from here onwards above 2900 levels. So next hurdle is going to be the 3150 for the stock price in the next 1 month.
Alright, let's keep it going with all the stocks. And Jinay, coming to you, you've picked out Z as well as PVR Inox, two stocks from the entertainment space. Tell us why this has made it to your radar today.
Well, yes, so we had a report by ICICI Securities on the Indian media sector. Well, they have maintained a buy rating on PVR with the target price of rupees 2000, whereas they have maintained buy rating on Z Entertainment with the target price of 195. Now, if we talk about PVR Inox, then they are telling that the Hindi movies are making a strong comeback. If you look at 3-2, it had a strong opening weekend and the momentum is likely to continue is what they believe. Also, robust content pipeline in second half of CY 2024 is what it keeps positive for ICICI Securities, and they believe that attractive valuations keeps them bullish. Moving on to Z Entertainment, now ad spends are likely to increase as the festive season comes in. Also, Z Entertainment has gained market share in Malayalam, Hindi, Kannada and Tamil in Q2 of FY 2025 versus Q1 of FY 2025. They believe that Z could re-rate to its long-term historical P multiples given the sectoral tailwind for TV broadcasters, and that is why they are positive on both PVR Inox as well as Z Entertainment.
Okay, let's move on to the next stock. And Nagaraj, Deepak Fertilizers. What's the story that you're seeing on the charts for Deepak Fertilizers? Some of these chemical names, obviously, we've seen a bit of a subduedness, but Deepak Fertilizers, the story in the last 3 months has been very different. 87% uptick. Is this up move something that is continuing, or should one book out profits?
I'm hoping that this up move is likely to continue. If you look at the chart, has been a tremendous up move, and without showing any reasonable downward correction, not even sharp downward correction in between. Recently, we have a one-day decline. After that, a few days of sideways consolidation. Again, today, this stock has moved up and made into new swing highs. The overall chart pattern with RSI and volume pattern is also looking positive. This upside momentum is likely to continue. The next overhead resistance to be what? Around 1110. 1110 for the stock price.
Okay, so that's the view coming in on Deepak Fertilizers. Let's talk about another newsmaker in today's trade, and that is GET&D. On one hand, we had Genus Power locked 5% in upper circuit. GET&D is locked 5% in lower circuit as of now. Winnie, that's an interesting, momentum coming in across the market. And let's understand why this has happened. Now, the shares have fallen as much as 5% in lower circuit after the company said that the promoter entities are considering selling a minority equity stake from their combined 75% holding in the company. GE Grid Alliance BV holds 6.46% and Grid Equipments Private Limited holds 68.5% equity stake in GET&D India as of now, and these promoters are mulling to sell some stake out of this entire total stake that they hold. The company added that the promoter group expresses its strong intention to continue to be the majority shareholder in the company. So they're going to be trimming a very nominal stake when it comes to this company, but the street is not taking this news positively, and stock is down and out in today's trade.
That is about GET&D, but let's move on to the next stock that we have. Not stock, actually, it's a story, because exchanges have submitted a response on proposed overhaul in the F&O norms. Now, ET now is learning from both the exchanges that they've given an agreement on 7 proposals in the SEBI's consultation paper. What are these highlights that are coming in? What are these 7 points that they're talking about? Let's go across to Ankur Mishra, who's joining in with us with all those details.
Yes, in a fresh development in F&O proposed norms, we understand through sources that exchanges have now submitted the proposals comments to SEBI. Now, this is important because industry-wide acceptance is important for these norms to be implemented, and we understand that exchanges have given their go ahead for these 7 proposed changes. Now, what were those 7 changes which was proposed in the consultation paper? It was rationalization of strike price for options, upfront collection of margins, increase of minimum contract size which is currently around 5 lakhs to 15 to 20 lakhs. There was also a proposal of rationalization of weekly index products, and for that both the exchanges need to sit together, and also increase in margins in near contract expiry. So all in all, exchanges have come in favor of these norms. Now the only ball is lying in the court of brokers, so where we understand that there are few changes which are proposed by them, because we understand that it is going to impact the business of brokers as well if these norms are implemented in the entirety what has been proposed in the consultation paper. But all in all, for now, exchanges looks like are in agreement of these proposed norms, and we may see that in the next board meeting itself SEBI may consider proposed changes in future and options.
All right, Ankur, thank you so much for joining us and helping us understand what this new SEBI regulation and the paper holds in terms of regulations. But on that note, we'll slip into a very short break on this edition of Market Fatafat. More stocks to talk about when we return.
If you like this video, then like, share and subscribe to ET Now.